Hey everybody, Jake here at TrendSpider to go over the TrendSpider weekend video analysis. And going into the week ahead, the last week of September, we're looking at a lot of charts have continuation down from last week's video that we talked about these breakdowns occurring. And so we'll go over kind of what the charts look like going into the last part of September, going into October. And as I mentioned just a second ago, a lot of continuation down. But before I want to jump into the analysis here, I do want to mention that we do now have futures on TrendSpider. So definitely something that you can check out. I'm going to look at the S&P 500 futures as well as the NASDAQ. So on the platform, that's ES1 with an exclamation point at the end. And then for the for NASDAQ, that is NQ1 exclamation. So definitely check that out. I also want to mention that we do have a 50% off sale going on this weekend to kind of celebrate the new futures data launch on the platform. This has been a big feature that we've been wanting to get on. A lot of people are trading futures, especially with not a ton of liquidity in the options market as the market's been tanking. So futures are now live. Definitely check them out. And as I mentioned, ES1 exclamation is going to be your E-mini S&P 500 index futures. So we'll start off with this. So you can see here that we did retest the June lows here this week, pretty much on Friday, just a huge move down. And remember, I do these videos on Friday. So today we did retest this zone. Now we did get a little bit of a bounce. You can see that shown by the wick here, but all in all, looking rather rough, at least on, the longer term time frame. You can see here on the right hand side chart, we were discussing this symmetrical triangle breaking down last weekend. We got the continuation down this week. We're retesting these June lows, which are kind of in conjunction with these December 2020 and February 2021 lows here. So definitely an important area to hold. And if we don't, that is definitely not going to be good news for the market. So all in all, we're kind of right at this horizontal level here shown on the weekly chart with this orange box. But then you can also see this on the daily chart with a little more short-term price action here showing these June lows being retested. So, do we just get a big W bottom forming here? So here's, essentially, what possibly some people would look at on the bullish side of things. Remember, if you're looking at the markets, especially if you're trading the markets, you want to be able to see both sides of the equation. So obviously your bear case is the fact that we broke down here on the weekly chart to the downside through the symmetrical triangle last week, had continuation down. If we do break those June lows, not looking good at all. And then on the bull case side of things, you'll see here that we do have potentially maybe a W bottom forming if this area can hold. But for now, the trend is definitely down and not looking incredibly strong here going into the last week of September. Now, we'll go into NQ1 with an exclamation. That's your E-mini NASDAQ 100 futures. NQ1 exclamation is the ticker that you want to use to check this data out. And same thing here. A lot of these charts are going to look pretty similar. You can see here that we do have the June lows that we didn't test as well as we did on the S&P 500. But all in all, still some pretty rough price action pretty much throughout the whole week. You can see here on the weekly chart, same thing that we saw on SPY. I didn't draw that symmetrical triangle, but you can see it here. Pretty much broke down through this area last week, continued down, not as clean as the S&P 500, but you can still see we broke down through this diagonal trend zone. And if you look back, pretty much over the last 10 years, we've got this really long-term trend zone, pretty much starting back in 2010. And if we do gain momentum to the downside, you'll see here that we do have the February 2020 highs almost right in line with this trend zone. So that is right around 95 to 9,600 on the NASDAQ 100 futures. And you'll see here, if we just draw kind of an arrow and point to possibly when this could happen just based on the confluence of these two areas, that would put us maybe down in this area towards the mid to mid to late November. So, price action rules everything. If we hold here and we get a really strong candle going into the beginning of October, then maybe we're once again here at a double bottom, as we talked about potentially on the S&P 500. But all in all, you do have to see both sides, the bull case, the bear case, to really have a complete neutral bias in the markets, and that's generally what keeps you in the markets. Now, going into small caps, we'll just do IWM for this one, but remember, the ES1 exclamation, NQ1 exclamation are going to be your index futures for the S&P 500 and NASDAQ. For IWM here, you'll see that we're not looking much different than we did on the other ones, and a lot of these charts are looking pretty similar. We're getting close to the June lows once again, kind of like the NASDAQ. You can see here that we didn't get all the way down to the June lows like we did on the S&P 500. But all in all, you do have a little bit of a wick here showing some exhaustion on the selling side into the end of the day, and potentially some buyers trying to step in, maybe some shorts starting to cover, and then buyers maybe picking up some steam on that. But all in all, if you look on the weekly chart, we're breaking down pretty much through this trend zone, starting from the COVID lows, connecting that to the June lows here, and then extending that over. We finally broke down through it. You'll see that here. And not an incredibly strong setup here. Now, we've had two very strong moves to the downside. So as I always mention, whenever you break out or break down, there's always a potential to just retest this area before continuing in the direction of the trend. In this case, the trend is down. So, could we easily retest this trend zone up to the upside, maybe in the upper 170s? Sure, absolutely. Anything's possible in the market, and that's why you always have to have these multiple perspectives to really keep yourself honest and not be succumbing to some type of bias that you have based on a position that you have in the market. But all in all, we are breaking down here. There's no denying that. And we'll see what happens going into next week. But we do have a gap below here pretty much from November of 2020 that would fill right around 155. But once again, in order to really get hard moves to the downside, you have to get these dead cat bounces to kind of trap longs and shorts to kind of reshort the market. But, could we potentially get some type of W bottom here as well? Possibly. That would definitely be your bull case. And we'll see how that plays out going into the next few weeks to see if this area holds. Going into Bitcoin, this is definitely something to always keep in mind on the weekend if you want to get an idea of maybe how the markets are going to do going into the week ahead. If you don't really have anything to watch over the weekend because the broad markets on the equity side are closed, Bitcoin's a good way to get a gauge of maybe what sentiment is, risk on, risk off. In this case, Bitcoin is looking exactly the same as last weekend when we did the video. You're still in this descending triangle here. We're getting close to the apex. The apex is really just the end of this setup. So you can see here pretty much the apex is right around the first or second week of October. And then after that, you kind of either going to break up, break down. But remember, price action can always just go straight and do nothing. So generally, that's not the case when you have these types of moves. You generally get a big move to the upside or the downside. Price action breaking up or down through this area is kind of your trigger. So until that happens, you're really just taking a guess on which way price is going to go if you're trading within this triangle. But definitely keep an eye out for possibly a break. And remember, if you do want to create an alert on these areas, let's say that we just want to connect this wick to around that wick. You can always right click the line, create alert at that line. So when the price does break either up or down, you're alerted. You get that on your phone or your email, depending on whichever one you choose on the platform. And then let price action lead the way. Don't try to guess and trade within an area that really has no edge. Trade when price is actually breaking to the upside or the downside. And generally, price will follow that overall move. Now, on the weekly chart, you'll see here that we did talk about kind of the retest here. So we were talking about this on IWM, where you can break down, retest an area, and I'll use the arrow so you know exactly what I'm talking about. We held this area, we broke down through it a few weeks ago in early August. We retested that area, and then we rejected, and now we're starting to move down. But the fact that Bitcoin has not broken down yet is quite interesting, and a little just kind of not what you would expect with the selling pressure we've seen in the broad markets. I definitely thought when the broad markets were tanking, you'd see Bitcoin reflect that as well. But at the same time, Bitcoin's been trading at these June lows. So pretty much everything is now trading at its June lows, and we'll see which way we go from here. But all in all, keep an eye on this descending triangle. If you have TrendSpider, draw it on your chart, set some alerts, and wait for price to confirm up or down through this setup. Going into some individual names, we'll start with Tesla. Tesla was really having some relative strength last week, and initially you did kind of retest this area, this 314 to 318 area. I think we got right up to around 313.75. So not a perfect test of that 314 to 318 area, but all in all, kind of a test of the bottom of that zone. And you'll see here that we have this ascending triangle that did break down today. Not a great look for Tesla here at all. As I mentioned, anytime we're using a break or breakdown, possibly a retest of this area before continuing down. But at the same time, this is held pretty well. So is it going to catch up with the markets and potentially fill this gap below from June, which is right around 250? We'll just have to see. But all in all, this is nowhere near its June lows. Sorry, that was July, not the July gap, not the June gap. So this gap from July 21st would possibly be your target below with this breakdown. And as I mentioned, that's right around 250. But overall, this is nowhere near some of the other names that we've gone over so far near their June lows. This is still, from the June lows, we're still up about 30%. So is Tesla going to catch up, or is Tesla going to have relative strength throughout the rest of this sell-off? We'll have to see. Clearly, the bear case here is the ascending triangle breakdown. Your bull case is still potentially an inverse head and shoulders forming here. That would be invalidated really with a close below that this previous area here. So your wick, I'd say right around here. And honestly, I'd probably say it's invalidated if we close below this open on this candle right around 260. But we're looking at the weekly chart, so you want to kind of use the weekly closes as your invalidation area rather than daily closes. So if we close on the weekly, let's say below 260, I think that's definitely your invalidation point here. But for now, potentially an inverse head and shoulders with this right shoulder possibly still kind of consolidating and forming that shoulder. But we'll see how next week goes, and we will reevaluate as price action evolves. Apple is the next one that we'll go over. Apple is an interesting one. We've got this symmetrical triangle here. We intraday broke down through the support zone, but actually held above it into the end of the day. So you've got a little bit of kind of a doji hammer here right on this support zone, technically closed right at this line that would have invalidated this setup. And definitely shown potentially more downside here. But, all in all, still holding exactly where it needed to. And you did have that intraday break. So, that is something to definitely keep in mind. But on the bull case, kind of the same thing as Tesla. You've got potentially an inverse head and shoulders forming here. So same thing, if we just draw simple shoulder annotation, here's your potential other shoulder forming here. And here's your head here. And that was pretty much your bottom from June of this year. And that is really right at this COVID low VWAP zone. So if we did break down through this right shoulder here and we continued to move down, I'd be targeting this COVID low VWAP zone anywhere from around the upper 120s to lower 130s. And that's that blue area right here. So we'll see what happens. Clearly have two cases, bull and bear, to choose from. That's why we like to do these videos, to give you another perspective in the markets, and then you choose, what fits your strategy and your style, and use this as a resource, not I have to do this because Jake said that. This is simply just another piece of market analysis to use in your toolbox of resources that you have. Next one that we will go over is NVIDIA. NVIDIA is not looking great, to say the least. Now, the one thing that I was kind of focusing on last week, you had this falling wedge here. You had potential divergence. You had lower lows on price. You had higher lows on the Williams percent range. This area broke down, so possibly the March 2021 lows in play as we broke down possibly in the next couple weeks. And this was really a leader during the bull market, and now it's leading to the downside. We're nowhere near these June and July lows. We're much lower. So is this kind of leading the market along with other semiconductor names? It seems so, but you've also had almost a 35% move down in about 5 or 6 weeks. So a dead cap bounce would not shock me here after such a aggressive move to the downside. So that's definitely something to keep in mind. Just roughly looking at this, you could probably draw some type of kind of falling wedge here on the shorter term time frame as well. That may be not necessarily breaking down yet, but all in all, this is in a downtrend. If you want to try to bottom feed, generally doesn't work out too well, but you can see here that we are kind of consolidating a little bit. Price is kind of coiling, if you will, and we'll see how that goes next week. So bull case, simply the fact that we have this huge sell-off over the last 5-6 weeks, and you generally are going to get at least some short covering, which creates essentially an artificial pop in price just from that demand coming in from shorts covering and buying back their positions. And if that's the case, you do have a couple gaps above. This is where you definitely want to use the gap detector on TrendSpider. So we've got a few gaps here. We have essentially a gap up from September 9th, and then you have a gap down from September 13th. So you essentially have this area above right around 139.25 all the way up to around 142 that you have essentially two gaps. There hasn't been a lot of price action at all here in the last month or so. And then above that, you have a gap that fills right around, it fills all the way up here around 149.60 or so, but starts down here around 145.50. So those would be your targets above if we do get a bounce. So keep those in mind. On the upside, the downside, the March 2021 lows are anywhere from around 114 all the way to around 116.50. So that's your upside and downside areas to watch going into the next week or two. I won't be doing a video next week, so the week after we'll have a lot of things to go over and update after 2 weeks of price action has evolved. Going into Microsoft, we talked about Microsoft really breaking down last week. We had potentially this double bottom forming that we were talking about. This broke down as well. Another one that's just gotten absolutely destroyed over the last pretty much 5 or 6 weeks. Down 20% in about 5 weeks. So, is this enough for shorts to start covering a little bit and starting to add a little bit of demand back simply from them covering their positions and buying back? We'll see. But, for now, we broke down through this level, potentially a retest and then continuation down. We'll just have to see. But on the weekly chart, it's pretty clear what's happening here. We're breaking down through about a 7-year trend. And you can see, that is about as clear as day when you zoom out. Definitely a big move down. A retest of this previous support level acting as potential resistance. This area above around let's say 260, 265 is possible. But for now, you definitely are fighting the trend, which is definitely down, especially after breaking through those June lows this week. Going into your next and actually last ticker here is ENPH. This was a market leader and has been for quite some time, but even this one is getting hit as the broad markets start to sell off. The main thing is we're still holding this pretty much this late July gap up. So we haven't broken down through this green area yet. You've had bounces at this zone multiple times. Now, when we start to break down and close below this area, which is right around 263.50, let's just turn on the gap detector. The automatic gap detection is showing 257.90 or so as a gap below. The next one would fill right around 220. You have another one that fills down here around 195. So if solar names really start to get hit and add to some of the selling pressure in the market, you do have a lot of gaps below. This chart's looking a little bit like Swiss cheese. So for now, it is holding this area that it needs to, highlighted in green. But all in all, definitely starting to move with the broad markets when before it was having some pretty strong relative strength. Now, one thing I'll mention here on the weekly chart, you have this pink line here, and that's essentially to highlight this with the RSI, which is showing some pretty strong negative divergence. So anytime you have negative divergence, that means price is hitting higher highs, but the oscillator, in this case, the relative strength, is hitting lower highs. So back here when you were at right around 58 on in phase, the RSI was around 92. Then we topped out here in January of 2021 around 220, and your RSI was down here around 85. We hit a new high here, and that was around 275. Your RSI was around 87, and then we hit a high of about 321 and some change, and the RSI was down here around 80 to 81. So you're hitting these higher highs on price, you're hitting lower highs on the RSI, generally a sign that momentum is starting to fade for price. So that is definitely something to keep in mind. Notice here that you've got back in late August, you had the RSI break down around 67. Price was right around 278. Now we're right back around that price, but the RSI is breaking down even lower. So not incredibly strong price action along with price and the oscillator action here with the RSI. And if we do continue down, you've got some area to move down to possibly the high 190s. So we'll see what happens, but this is not what I would call a high probability long setup by any stretch of the imagination. It would definitely be more of a high probability downside setup. But everyone has their own way of looking at things. Before this was looking really strong, price action evolved, and we're retesting these areas. So if price breaks down, then we're likely going to start filling these gaps below, and you don't have a lot of volume here. So if we use the volume by price tool, a lot of that volume is holding up here. So if we start breaking down, you've got a big area of just not a lot of volume, and this can act as a vacuum for price a lot of the time. But as I mentioned, as long as we hold above this green area, definitely holding pretty well, especially relative to some other names out there, especially when you compare to where we were in May and June. From the May lows, we're still up almost over 100%. So clearly some relative strength here. Let's just see if it actually holds. That is all I have for the market update this weekend. Hopefully it was helpful. Seeing some bear cases, some bull cases. It's always good to know what the opposite side of the market is looking at. So if you're long, why are people betting against your position that they think it's going to go down? It's always good to know, hey, this is their thesis, and understanding that thesis and never getting too involved in your emotions with a position that can easily create bias, and that's how you get burned in the market. It's happened to me many times, so I'm speaking more from experience rather than trying to lecture anyone, but definitely keep that in mind, especially for newer traders. Keep your mind open, be able to see multiple perspectives, and that's going to help you in the markets for sure. Remember, we do have that 50% off plan for 24 months off any plan, and that includes the $7.50 futures data fee that we have. So you would get 50% off that as well. So remember, futures are now live for the S&P 500 ES1 exclamation. For NASDAQ, it's NQ1 exclamation. And then, if you wanted to look at more futures tickers, we do have actually on the watch list. We do have some different predefined things here. So if you go to your list, you can see you'll be able to find those here. So all in all, thank you everyone for watching. Hopefully you have a great weekend, a good end to the month of September, and we'll see you in October.